Greetings from Continuum Global Asset Management. This is Manu Walia. It's September 16th. It's about 2 o'clock Pacific time. The market's closed today. This clip that I wanted to produce is a follow-up to a clip that I put on YouTube on August 23rd. In summary, that day, our President Donald Trump tweeted that he ordered the US companies to not do any business with China, and the markets fell about 2%. Some of the indices, NASDAQ, S&P, were down more than 2% that day. In any event, I put in my 2 cents, and I mean that it's just 2 cents. Economists, analysts, advisors, when they came out and make predictions, they're just predictions. I mean, they are based on fundamentals. But as the great Nicholas Taleb says, we get fooled by randomness and we start to believe that we are smart enough to make those predictions. Since that clip, the markets have gained between 5 and 6%. And if you go on my website and you look at the August newsletter, it clearly states that we believed that that was the time to start adding. Again, in addition to the market turmoil, I believe that the fundamentals in the US economy were looking good, and also the volatility index had gone up to the 25 range, which is too much fear for something I thought was a very opportune time. In any event, having said that, one should not and cannot take credit in the markets because the markets will humble you. Recently, I watched Sam Zell, who is a multi-billionaire real estate investor, and he was sitting on the panel on CNBC, and he mentioned, hey, we're sit here and we make these predictions that the market's going to go down, the market's going to go up, so on and so forth. But at the end of the day, things continue to move forward. Having said that, I wanted to bring to attention to the US investors, specifically in the US markets, that if you scan the horizon and you go from the Far East to the West, you will see that the United States markets are currently the most stable markets. And if you can pick and choose value, and I repeat, value companies, for instance, we just saw a letter recently from Elliott Management touting AT&T. I actually went through the entire 23 pages, the letter they sent to the AT&T management, and they had done a lot of research, and they've allocated, significant resources to make sure that what they're saying has pertinence. So we can find companies like AT&T and so on and so forth, which combined with their dividends and capital gains could give us good returns and hold their value if and when we see a recession. Having said that, I would reiterate the point, we need to stick to our convictions, whether we see a tweet or we see some kind of turmoil. If we believe that our convictions and our fundamental analysis remains, then we should hold steadfast to our positions, because that's what's going to make the difference between making a decent return and making disastrous mistakes. Thanks again, and you can reach me at cgamadvisor.com. Thank you.